Welcome everyone. In this video I'm going to be going over the trade breakdowns I've taken this week. Primarily 3 trades so far towards the latter end of this week. If you want to see the previous ones, go over to my Twitter, they're most likely over there. But I've ended this week so far 66.6% in win rate. Might take another trade today. I've still got another trade running, which is a guaranteed winner, so that might take it up towards 70%. Again, for me, win rate isn't everything, and actually generally on any given week I generally actually average around a 62% win rate or something around those lines. So yeah, bear that in mind when looking at this data. So let's just go into actually the trade breakdowns using Exo charts in great detail to go over these trades using the replay feature over there. So let's go through the context of this first trade first. Okay, so to begin with, what happened? We had this high, initial high on the chart here, and above this high, technically there is a gap in price action. So if we just put this marks out, you can see you've got this swing high, then you've got a gap in price action really to the next swing high, which is all the way up there. So the first trade I took was actually the swing failure pattern off of this high here. Okay, so I took this swing failure pattern here. Okay, I got stopped out of it before then re-entering, but let's discuss a bit more about this. How did I enter? Why did I enter there? So if we just head over to Exo charts again, head back over to the overall high we had, which was here, and you can see on this high here that we put in, this was the high I'm referring to, which I took the swing failure pattern trade off of. There was a lot of boxes ticked here. Okay, so for myself, we had that open interest increasing, open interest increasing, positive delta, increasing volume, liquidations, trap value area. Now I know I brushed upon a few points really quickly over there, okay, but if we just really briefly expand this data here, you can see what happened was we closed away outside of that value area. Okay, the point of control of the candle was all the way up towards the high. Okay, and we actually saw this T-size divergence, which again will be covered at a later date in great detail, don't you worry. So there's a lot of things, and again, the one tip I'll give you in terms of volume, just looking at it, again, it's more so relative volume analysis in this case, is where you can see it, this candle has 19.4 million volume. Okay, just look at the past 20 candles or so and go, okay, how does the volume compare to the average of the last 20 candles? And you can clearly see this is a spike in volume, so that's how I'd clarify that data there, just by generalizing. You've also had extended delta maximum, where this is a larger discrepancy from the actual finalized delta. Okay, so upon this close is where I got my entry. So if we just actually we'll do this, actually you can hit the replay feature here on Exo charts. If I hit the pause button here, so this is actually what's going on live in the time. Okay, hit the play button, pause. You can see this is where I'm seeing this. Okay, I can see the volume spiking at a key level of interest. Okay, this isn't just at a random level on the chart, it's at a key level of interest. Okay, so we then hit the play button again. You can see I'm waiting for the candle to close. Okay, so here, and that's when I start again. I really do recommend, although it's a video I did a while back, that limit entry video, getting in at limit, going in on in silico, and always getting in at limit. I scale my orders when I see this straight away. So we hit the play button. You can see price then comes back up, and as soon as you see price come back up, that is me getting filled with my validation above like the point of control, where the new longs are opening within this candle region. So in that case, invalidation set. I'm looking for lower, and lower we eventually ended up getting. If we just head over to TradingView, I got stopped out of this trade. So this is the first one I'm talking about here, and I'm actually targeting throughout the day, just so you can understand my daily bias. I had a high hit rate level which was coming in down at 25,818 region. Okay, down towards this region here. Okay, so I knew, well, I didn't know, but I knew the favors towards any sort of short. We were moving up, and I said to myself, any sort of potential short trade, rather than taking profit so quickly, hence why I wouldn't take profit here, I was really going to be targeting back down all the way towards the high hit rate level for myself. Okay, and obviously we saw the secondary SFP, so obviously I got stopped out the first one. There's no excuses for that one. Okay, but with obviously competent risk management, things can go in your right direction. So if we just look at the secondary trade now, let this reload back up. So that was the first trade we took. You then see another swing failure pattern of the high, and this is happening upon a news event. Okay, so again, a lot of news is coming at the time. I was anticipating another swing failure pattern, because as well as obviously it just being another SFP of an SFP, if you like, I believe if you just take if we just mute that, take a dynamic profile tool, yep, this is the one. You can see these CVDs decreasing. That means there's more market sales coming into the market, and it's actually open interest increasing. So that's more new market sales coming into the market. Okay, so we've got new shorts coming into the market after this initial high being put in, which is fair enough. I mean, I shorted the high, but obviously when you see the majority are shorting, it gives the opportunity to then just stop them out before the initial move then happening. Okay, which is what happened in this case. And again, upon seeing that breach of the high, I literally was shorting. I anticipated this. So this is a tag I put in my journal. I anticipated the candle closing much further back down based upon all this data here. So we saw it move up, and as it was coming back down, that's why I then got my entry by chasing price. Okay, so again, I essentially chased the order book and got my orders filled that way. Before then, obviously targeting down towards that 25,800-ish region that I was looking for, where I took off 75%. Okay, so that's the first two trades where essentially SFP again, to then target towards the lows again. I got stopped out, but again on this secondary one, you can just see because I'm not targeting just like arbitrary levels and really low profit regions. I got 3-4R out of this trade based upon having a high hit rate level in play. Okay, the second trade, so I'm actually going to cover 5 trades I believe in this one, because we're very, very similar scenario yesterday, which I ended up trading as well, where I took a trade yesterday upon this initial SFP. I believe I did at least, yes. I took this initial trade off the SFP, and I then ended up getting stopped again. So initial trade taken, and I'm still targeting low. I had high hit rate levels again below on the same day. And then I said, okay, well, let's target lower prices. We obviously then got stopped out of it. I'm not going to sit there like a deer in headlights. I know if I get invalidated on a trade, will I re-enter if something occurs? And the answer was yes. It was a very similar scenario, and this was 2 days ago. This wasn't yesterday, but 2 days ago, the trade I took yesterday was a long, which we'll go over, which was actually really interesting. The long yesterday was actually the most interesting one, to be honest, which I think we'll go over in a second. But this obviously had the SFP again, stopped out, re-entered. So I don't hesitate to re-enter upon seeing this type of data. Okay, let's just go over to the order flow. Where was this? Over here. Okay, this was the initial SFP. Again, just the one big telltale factor for me is just the volume itself. Like, you can just see at key levels of interest, how does the volume compare to the last 20 candles on average? That's all I'm really looking for. And then looking at what's going on within that candle itself and data like that. I mean, I'm going to be coming out on massive type of information on this type of detail. So yeah, don't worry about that too much. But you can see again, what was the key level here? You obviously had the highs, okay, but also you had this daily naked point of control that was up here. These grey and red rays, grey being the volume, red being the time. You swing failure pattern into that. I enter, I don't take profits. I do not take profits. Maybe I should have, and it probably could have been a winning trade, but I didn't because I had higher hit rate levels lower, and I'm waiting and patient for those ones. And again, that's just different ways people manage their trades. In this case, it was spike in volume, extended delta, and obviously the T size divergence, which I haven't gone into yet, but it's very, very crucial for me at the moment. Obviously, you then have another swing failure pattern where I'm instantly re-entering. Okay, when I see this, I literally have my alerts set before my stops being hit, so I can always just come and monitor the chart for when my level's being hit, or if my stop's being hit, or whatever it may be. And as soon as I see this on the 5 minutes, so we're looking at the 15-minute right now, I saw this on the 5-minute time frame, okay, and obviously on the 15-minute, you don't have a trap value or anything. It looks like it's very quick. On the 5-minute, you had a tiny bit more time to get in. It wasn't just so move up straight back down. You had probably like a minute or two to anticipate this moving back down, which is where I then got my entry again. Okay, so obviously that trade took me really well on far towards the downside. I mean, I ended up taking profits on this one, I believe down towards these lows here. So I held it this whole way down, and that's kind of the way I trade. I'm looking for these high hit rate levels that I have, and I really take advantage of that by trying to maximize my R multiple from those, which obviously means I need a lower win rate. But even with that, the winners become actually much more extravagant compared to the losers. So let's go over to the next one. Okay, so obviously I actually ended up closing. I closed 75% towards this low here. And again, in hindsight perspective, I could have been like, I should have really only closed it upon a sign of strength in the chart, because it kept dumping and dumping, and I had 25% running. Well, I ended up closing the rest out. I believe it was yesterday on this one. So I closed the rest out on this one yesterday, and even the top one I ended up closing out. So those shorts are now closed, but this is the long I'm in, the absolute long from the low. What happened down here? Because some exchanges didn't take this low. So if we just head over to TradingView quickly. We went through so we had, what we had here was one loser, one winner, one loser, one winner. And you can just see the details upon those trades and how actually, even if one was a loser and one was a winner, 50% win rate, right? The actual R multiples of those winners are much larger than those of the losers, okay? Because I'm always losing -1R. That's kind of the way I just keep it in that case, obviously depending on the risk itself. But yeah, moving over to the actual lows being taken. So this one was, I posted this in the morning on the Twitter looking for these lows being taken. Typically, I like to see a larger wick put in, but if we just go over to the order flow, this is something I've kind of established where I can have a level of interest being a low, okay? But if even if we're like just approaching that low, a potential front run can occur. And this is how we can identify front runs essentially through the order flows. I'm still looking at, even if we don't take the low, what do we have a spike in volume? Do we have like a reversal pattern? Do we see trap positions, etc., to potentially anticipate a trapped, a front run scenario? Obviously, in this case, we just about tapped it, giving us that trade. But if we just head over to the XO charts, you can see we obviously have that low. Let's just mark it out. So this is the initial low here. You then take the low in this case, but just look at the characteristics of this low. And this is going to be extremely important to note. Open interest increasing, negative delta. What does that tell me? Instantly, these are new short positions coming into the market. New shorts coming in. Okay, and obviously look at the volume. Again, look at the volume. So remember what I said earlier. Apologies, I just hit my mic. 18.2 million volume, okay, compared to the last 20 candles on average. Clearly, it's a spike in volume with those new short positions coming in at the lows, okay? So obviously we've deciphered that, but where are those short positions coming in? I always refer to where's the POC, where's the value area. So we've closed up here, but the point of control is still quite a bit down towards the lows. So it's not a trap value area setup in this case, but you've seen trap shorts, through this, liquidations as well, 56,000 down here. Okay, extended negative delta, but you can see the discrepancy here, like the overall final delta of negative 1.7 million compared to the extended delta minimum, which was minus 4.2 million. That delta is trapped towards the lows of this candle. You can see through the delta cluster shading in that case. And that's where I simply was like, okay, it makes sense to enter here. There was no reason to not enter, again, especially with the T-size divergence also down here. And this is something, yeah, like I said, I'll cover because it's extremely crucial for me lately. But in this case, this was the trade. As soon as I saw this type of information, I'm entering. As soon as the candle's closed, I'm entering. I'm reading this information really quickly, and at a later date, I'm going to show you exactly how to read this info extremely quick, and how to just simply generalize the data as we've been doing today here. So you can see how this trade ended up playing out. I actually wanted to target on this day again. This is like all of these trades are coming from biases that I have in terms of high hit rate levels. I want to be honest with you. If we just head over to, because I took the long, and if we just go over to here, I had this was the setup, okay, or something like that. I don't put my stops really below or above the lows too much because of I can increase our multiples by having it just below the point of control or below a point in which, a point of no return. But rather than this case, I actually had my take profit coming in at least the first one above this high here. Because I had a higher hit rate level coming in at these highs. So that any sort of drop made sense to long to target those high hit rate levels. Obviously, I took off, like in this case, 65%, I believe, or 63 or something along those lines, because I manually inputted it. But overall, I plan on taking the majority of the profits at the highs here, which we did. And I took off like another 15%, but then obviously I'm still holding this long, actually. I'm still holding, I believe, like 10% of this trade, 10-15%, something along those lines. Of this trade until I see a sign of weakness, which brings us back down towards here. But in terms of the entry, the criteria for entry, trapped shorts in this case. The other ones were SFPs where volume spikes occurred, liquidations, and then obviously looking for those higher hit rate levels to increase my actual R multiple on those winning trades. So hopefully this video made a lot of sense to you all. Hopefully you found it informative, and I'll catch you all later.